of deflationary indicators, starting from commodities, and we'll get into that in a moment. But at the end of the pipeline, downstream at the consumer level, retailers are awash in inventories. And the latest one, pretty provocative, is Nike. And Nike is both a retailer, but it mostly sells to retail. Nike's inventories increased 44%. There were already telltale signs that the consumer was weakening. Its North American inventories were up 68%. And the inventories in transit, mostly from Asia, so they're on ships, were up 85%. You know what's going to happen. In order to clear the shelves, Nike is going to have to cut prices, and retailers will as well. And we believe this is just a microcosm of a much broader problem out there. And we think we'll see it in full force. So we took a look at the data for the last month because the Fed is saying that it's data-driven. So if it's data-driven, let's do that. If you look at the data, 80s, 90s, 2000s, you'll see that inflation came down during times when the economy was very strong. Why? It's because of productivity. Productivity growth is a byproduct, a critical byproduct, and an anti-inflationary byproduct of good, strong recoveries. Let's go to the commodity prices. Again, data-driven Fed, are you listening? We'll start with, from their peaks, we've got gold price, the gold price down 17%, copper down 30%, lumber down 73%. Think about that. Housing is collapsing. Iron ore down 45%. Infrastructure around the world has run into trouble, especially China. Corn down 17%. Silver down 29%. DRAM prices, which are chips, semiconductors, down 46%. The Baltic Freight Index down 48%. That's an indicator of supply chain issues. The Baltic Freight Dry Index, which is just for dry goods, down 65%. Oil down 29%. And many people have been dismissing these as saying, yeah, but they went to sky-high prices. You know, they're still not down on a year-over-year basis. That's not true anymore. Gold is down 3%. Copper is down 17%. Lumber is down 28% on a year-over-year basis. Corn is an exception. It is up 27%. Again, Ukraine being a big problem there. We have silver down 9%, DRAM prices down 33%, oil and corn. Oil is up 14%. It's had a big pop recently, but we do think, having come down from $130 to $90, it is in a downtrend, mostly because of demand destruction. There's another kind of esoteric price out there. I remember it from my days diving